Hi, it's Andy Hoffman, Marketing Director of Miles Franklin Precious Metals in our 25th year in business. It's the morning of Thursday, November 20th, and this week's audio blog is titled Cartel Desperation Exposed. Now, this week's audio blog will be somewhat different, in some ways, more like a daily article than a broad commentary. Don't worry, my big picture thoughts will be included. However, I also wanted to give a bit of manipulation education in verbal form after so many years of writing about it. The motivation of such was the utterly horrifying, blatantly egregious attacks the cartel has made in the past month, in my mind motivated principally, but not exclusively, by fear of a Swiss yes vote in next week's gold referendum. Even without the Swiss vote, the powers that be are juggling myriad death balls simultaneously, desperate to suppress the precious metal bearer of bad tidings in the face of a collapsing global economy, expanding Cold War, imploding currencies, dramatic expansion of European and particularly Japanese QE, and a general atmosphere of social unrest as characterized by not only the Swiss referendum, but those in Scotland, Catalonia, and likely in the near future Venice, Italy. Believe it or not, the Swiss referendum is not even the most PM positive going on in my mind, but instead it's the kamikaze attack Japan's lunatic central bank has executed on the yen. It's in true Keystone Cops fashion, the Bank of Japan is accusing Shinzo Abe of fiscal irresponsibility for delaying next year's psychotic sales tax increase, whilst engaging in the largest, most destructive money printing scheme in the history of the First World. And doing so, I might add, under the explicit moniker of Abenomics, as despite the political posturing, this is a joint effort by Japan's politicians and bankers to kick the can one final mile. Given its horrifying demographics, unprecedented exploding debt levels, and rapidly rising inflation, it won't be long before Japan's once proud civilization plunges into the third world. And when it does, the global ramifications of a yen crash will be catastrophic. Frankly, Shinzo Abe's calculated announcement of a snap election in December may well prove his personal downfall and potentially serve as the catalyst for an all-out yen collapse. Given his plunging approval rating, it is entirely possible he will be unceremoniously thrown out of office for the second time in a decade, leaving a rudderless Bank of Japan to flail in the wind. With the debt to GDP ratio above 250% and rapidly rising, it must continue monetizing all government bonds and a hefty portion of the Nikkei itself, lest the nation will instantaneously implode. However, doing so whilst the nation clearly votes against it could cause political revolution, accelerating the yen's inevitable collapse like a kerosene on a fire. Recall, the yen traded at nearly 300 to the dollar as recently as 1983, which is exactly where I believe it's going now, potentially much sooner than most can imagine. At that point, not only will all previous gains in the government-supported Nikkei stock index be erased by inflation, but the final currency war we have written up for the past 2 years will have gone nuclear. In other words, the entire world will be engaged in overt QE to infinity, led, of course, by the most destructive force ever known, the Federal Reserve. And when historians write of it, they will look back at gold and silver prices at $1,100 and $15 respectively in late 2014 and ask, how on earth could that have happened? This morning, the news is that the world-round PM manufacturing indices were reported to have plunged. China badly missed, and Japan equally so, not to mention a 44th straight monthly trade deficit. In Europe, across-the-board disappointments as well, ominously led by a German number that unexpectedly bordered on recession. Back to the precious metal markets, there is not a doubt the cartel's recent suicidal actions have been motivated principally by fear of a Swiss yes vote. Which way the vote will ultimately go is difficult to tell, and frankly, it's difficult to believe anything the pollsters publish. After all, we were told for months that last week's Catalonia secession referendum would be close, but when all was said and done, 81% voted yes, against just 4% voting no. The cartel's full court press this fall, both in the financial markets and mass media, has the PM community in a state of unprecedented skepticism, which, by the way, is the title of my article today, as day after day we are told how the vote must fail and gold plunge, and even if it passes, the powers that be will somehow find a way to hold gold prices down. However, it's not just the franc's fate at stake here, but Switzerland's unique monetary strength and independence. And thus, I believe the people may shock the world by loudly and forcefully voting to reclaim what the SNB has worked so hard to destroy in such a short period of time. After all, the SNB sold 1,500 tons of gold at an average price below $400 between 2000 and 2007, right before the biggest financial crisis in generations, and subsequently pegged the franc to the dying euro, which has since plunged 16%, whilst the SNB's balance sheet has nearly tripled. Meanwhile, Switzerland's GDP has grown by a minuscule 0.4% per quarter in the 11 quarters since the peg was initiated, whilst consumer inflation has raged out of control. Not in the official CPI, of course, which comically hasn't increased at all, but in real life, which is probably why the Swiss had a referendum earlier this year as to whether the minimum wage should be increased to a whopping $25 an hour. In other words, don't believe the propaganda for a second, let alone government proclamations that opinion polls favor the nose. Alternatively, simply observe the lunatic arguments espoused by SNB Chairman Thomas Jordan, which I wrote of earlier this week in He Doth Protest Too Much, to realize just how terrified the central bank is and just how few cards it is actually holding. Heck, the SNB doesn't even have the full support of fellow criminal bankers, who clearly are angry at Switzerland's aggressive currency war tactics. To wit, earlier this week, a member of the ECB's governing board, Yves Marchais of Luxembourg, actually claimed the ECB was considering the purchase of gold to offset potentially accelerating deflationary trends. Even I am in awe of such a blatantly pro-gold statement, even if it makes little practical sense, and frankly has not even a mild chance of occurring. In other words, such a statement was a major salvo in the aforementioned currency war, aiming to cripple the SNB at its time of greatest propaganda need. And trust us, the world's big money, in China and Russia for instance, took notice. Back to the manipulation education I mentioned earlier, people need to realize just how much work I've done on the topic over the years. Back in my days as a Wall Street sell-side analyst, covering oilfield services, equipment, and drilling at Salomon Smith Barney for 7 years, I made a name for myself with diligent quantitative research. And since going all in the precious metal sector in 2002, I've spent an equal amount of time researching PM manipulation in my efforts to both preserve my capital and maintain my sanity. After all, this time around, it wasn't just my career I was concerned with, but my life savings. I wasn't in the sector more than a few days in 2002 before I witnessed my first cartel raid, and just a few weeks later was an avid GATA reader. I quickly became close friends with Bill Murphy and Chris Powell, and over the years have become deeply entrenched in its circle of manipulation exposers, which, by the way, includes Miles Franklin's Bill Holter as well. And frankly, I doubt anyone has published as much detailed analysis on the topic as exemplified by the 6 manipulation primers I wrote in 2011, which can be found in the newsletter section of the Miles Franklin blog under the moniker Ranting Andy Special. Cumulatively, they total more than 600 pages describing cartel operations in detail on a daily basis over many years. Over time, such machinations have modestly changed, but the game remains the same. For the most part, such changes have simply involved an increase in the amount of key attack times, such as the 2:15 a.m. open of the London pre-market session, the 7 a.m. open of the New York pre-market session, the 8:20 a.m. open of the COMEX, the 10 o'clock a.m. close of global physical trading, the 12 o'clock p.m. Eastern Standard Time cap of last resort, the 2 o'clock p.m. crybaby attack time, the 4 o'clock p.m. open of the Globex paper trading platform, and so on and so on. And as we have seen in the past 3 weeks, 12:30 a.m. Eastern Time is now being utilized before the West even wakes up. Just this morning, even I was shocked to see the top MSM cheerleader Yahoo Finance publish a story by yet another MSM lackey, Reuters, titled Unusual Gold Moves in Asian Hours Puzzle Jittery Traders, referring specifically to the strange paper plunges at 12:30 a.m. Eastern Standard Time. To that end, here we have some quotes from the article, which even the most biased cartel apologist would have difficulty describing as anything other than manipulation accusations. Quote, "It is unusual for Asia to be seeing these busy trading sessions. I have spoken to a lot of people about it, and the general consensus seems to be that there is a big increase in algorithmic and high-frequency trading in this time zone nowadays, as it can be quite easy to push prices about." Then it says, the trend began on October 31st when U.S. gold futures fell through a major technical level of $1,180 an ounce at 3 p.m. Singapore time. They fell $11 in a minute, and nearly 9,000 lots were traded in 5 minutes, compared with just 500 lots in the previous 5 minutes. In the days following the first dip, gold tumbled 1% or hit new lows almost every other day around the same time, between 12:45 p.m. and 1:45 p.m. Singapore time. In other words, gold manipulation is going mainstream, as should have been clear last year when the Fed failed to return Germany's gold, or earlier this year when Deutsche Bank resigned from the London gold fix under accusations of price fixing, as exemplified by the president of Germany's financial regulator, BaFin, claiming the gold market is, quote, more manipulated than LIBOR. Throw in last week's announcement that UBS settled with the UK's Financial Conduct Authority by paying a large fine for gold manipulation, and it's difficult to believe why this, the world's most important financial market, is not only manipulated, but more egregiously than any other. As for silver, take everything I've said and multiply it tenfold, as it's doubtful any substance on earth has a tighter supply-demand balance, yet, due to the machinations of a cartel, well aware of its potential to destroy them at any moment, it's subject to more violent waterfall declines than Niagara Falls. And I'm not kidding when I speak of such volume. As per what I wrote in last year's irrefutable PM manipulation statistics, silver typically has had at least 1-2% intraday decline on more than half of all trading days over the past 2 years, oftentimes in the space of seconds, as we saw yesterday. Heck, on 6 separate occasions, this month alone, silver has opened the ultra-thin Asian trading session by falling an average of 1.8%, whilst not a single other market, other than gold, which was lower to a lesser extent, materially budged. What motivated today's audio blog format, however, was yesterday's blatant cartel raids, which frankly rank amongst the most transparent ever. First off, I encourage everyone to go to Kitco's historical charts and take a look at gold's 3-day chart. You'll see that for the past 3 days, today included, gold has been stopped cold by what I deem a cartel herald algorithm, which looks like a little flag, at exactly 6 o'clock a.m. Eastern Standard Time, at exactly the key round number of 1,200 per ounce. Trust me, the cartel is terrified that last Friday's upside reversal will be recognized as, quote, the bottom by vulture-like black box algorithm traders, as the last thing they need is massive short covering ahead of the Swiss gold referendum, not to mention Monday's potentially game-changing COMEX options expiration, the aforementioned ongoing yen crash, and countless other cartel fear factors. This morning was no different, although prices are again moving toward 1,200, following worse than expected inflation and jobless claims numbers. In fact, the Fed is yet again faced with defending the 10-year Treasury yield at 2.3%, which is again on the verge of breaching to the downside. Again, I cannot emphasize enough the importance of my May article titled The Most Damning Proof Yet of QE Failure, i.e., plunging rates despite so-called recovery and tapering. In other words, the entire world is front-running the inevitability of Federal Reserve QE to infinity, knowing full well the Fed will take rates ultimately to Japan-like levels nearing zero in its fear of instantaneous market and debt collapse. Of course, in the long run, hyperinflation will win out and rates will surge. But before that, the world's money managers, which must be long, or else they lose their mandate, will all front-run the Fed. As for yesterday, not only did we see gold stop cold at $1,200 per ounce at 6 a.m. Eastern Standard Time, but it suddenly collapsed into the abyss at exactly 10 o'clock a.m. Eastern Standard Time, by more than $20 in mere minutes. The MSM comically wrote of the release of a Swiss referendum poll indicating the noes were winning, but as I said above, I wouldn't believe anything published by the SMB's propaganda machine. Heck, if you looked at the amount of so-called important events that occur at 10 o'clock a.m. Eastern Standard Time over the years, from Malaysian airplane crashes to Federal Reserve speeches, you realize it's not a coincidence. And as for yesterday, all the other commodities initially plunged with gold as well, but magically recovered their losses whilst gold and silver held their lows. Then, miracle of miracles, about an hour later, PM started to recover, with gold getting to exactly the unchanged level just before the Fed's October 29th minutes were published. This tactic of holding the GLD ETF just below unchanged for hours at a time, or SLV at times, I deemed the DLITG, or Don't Let It Turn Green algorithm, many years back, and I mean many, as in 2005 or 2006. As longtime readers know, I deem FOMC minutes publication a key attack event. About 2 years ago this started after for years being completely ignored. Coincidentally, this started when the Fed's tapering propaganda scheme took shape. In other words, every time the minutes of previous meetings are released, gold and silver are slammed, no matter how innocuous or dated the information is, let alone that nothing incremental is ever revealed. In this case, PMs were again immediately slammed, and as usual, the Dow wasn't. However, gold again moved back to exactly the unchanged level before again being slammed into the close, again with no other market, from stocks to bonds, currencies, or commodities, materially budging. All you had to watch was the Huey Mining Index to realize it was a 100% cartel orchestrated attack, as in the true spirit of its longtime mantra that all great PM days must be followed by horrible ones, i.e., cartel rule number 2, the Huey's exciting 10-point gain yesterday afternoon was totally reversed. Well, that's enough for now as I watch the 10-year Treasury yield sitting at 2.303, desperate to plunge toward its 52-week low, and gold at 1193, desperate to breach 1200 to the ounce for good. Again, don't fret for a second about the Swiss gold referendum propaganda, or for that matter, the outcome. Precious metals are so below their cost of production, see today's comments from the CEO of Goldfields, that the supply-demand balance will destroy the cartel's best-laid plans irrespective. Heck, just look at U.S. Mint silver sales if you think metals are, quote, unloved, as the MSN would have you believe. But more importantly, use your head, not your heart, in determining how to invest. And thus, to those holding physical metal with no need to sell, we can only say one thing: relax. The powers that be cannot manufacture gold and silver, and the more they short paper metal, or surreptitiously disorder their scant physical inventories, the more rapidly the endgame of default will arrive. Cumulatively, it is difficult to conclude anything other than that something extremely economically, financially, and perhaps socially wicked this way comes. And when it does, the ensuing global stagflation and unrest will likely be unprecedented. Thus, we cannot be more vehement in our belief that this may be your last chance at financial survival. And for those taking the initiative to protect yourselves with physical precious metals, we hope you call Miles Franklin at 800-822-8080 and give us a chance to earn your business. And as always, I can be reached via email at ahoffman@milesfranklin.com. Thanks and have a great weekend.